Well, the strong dollar and falling oil prices also impacted General Electric's fourth quarter results, but in a much different way. The multinational posted higher profits and says it can handle currency moves and declining crude in the year ahead. Investors liked that news, and they sent shares of the Dow component up nearly 1% to 24.48. Mary Thompson has more.
Having bet big on the oil and gas industry, General Electric CEO Jeff Immelt sought to assure investors the firm can still deliver as oil prices fall.
Our job is to manage the company through volatility. And while we see the potential for risk to oil and gas based on current oil prices, we're aggressively working offsets through cost actions and positive opportunities elsewhere in GE.
Those opportunities include what appear to be signs of growth in GE's U.S. healthcare business, strength in its aviation unit, which makes and services jet engines, and the upside of lower oil for a manufacturer like GE, lower costs. Even the dollar's strength, an issue for a firm that gets 53% of its revenue outside of the United States, is seen as manageable. GE saying it might cost it a penny in profits this year if the U.S. currency remains at current levels against the euro. Crediting the diversity of its businesses, GE stood by an earlier outlook for 2015. The firm still expecting to earn between $1.70 and $1.80 for the year. This comes as GE reported an increase in 2014 fourth quarter profits and revenue, thanks to strength in its aviation and power businesses, which helped to offset an expected decline in its once rapidly growing oil and gas unit. Here's analyst Dean Drey.
GE has about 16% of revenue exposure from oil and gas. It has been one of the growth drivers over the past several years as they invested in this business. But now we're in a position where there are other parts of GE's portfolio that can be an offset.
This helping to offset investors' fears GE would fail to keep recent promises. For Nightly Business Report, I'm Mary Thompson.